Over the past few years, there have been 8 to 10 primary collector car insurance companies. There is a lot of consolidation going on, and I have it all mapped out for you, so let's get right to it. "2025 has been really interesting when it comes to collector car insurance. You've had about 7 to 10 choices over the past few years, and that is going to start dwindling. That's going to be reduced by a significant number. There was a transaction that happened in December that we'll talk about. There's some transactions that have happened over time that we'll talk about. And we'll start out with Hagerty. And Hagerty is the biggest insurance company out there for collector cars. Their prices can be a little high at some points, but they are kind of the gold standard out there. In 2021, Hagerty went public. That means that they are now on the stock exchange. They basically sold their soul for investors. Now, they still own a significant part of the stock. They still are backed by Markel, though they are forging into some partnerships with State Farm. State Farm in 2022 took a 16% equity stake in Hagerty. And as part of that deal, they are going to be starting a State Farm Classic Plus. And that was announced in 2022. Now, 2023, 2024, and 2025, they have been slowly migrating their State Farm customers on a state-by-state basis to a Hagerty policy. Hagerty will now do the servicing. It will be on a Hagerty paper, though it will not be the same as your traditional Hagerty policy. I still don't know if me as a Hagerty broker gets the same pricing as a State Farm rep, or if a State Farm rep actually charges more or not. But the bottom line is that you're no longer going to have a State Farm collector car policy. At some point in time, it will become a Hagerty policy. Now, Hagerty continues to grow. What they're also going to be starting is something called Enthusiast Plus. And Enthusiast Plus is going to be a policy underwritten by Hagerty on Hagerty paper as the actual carrier. Today, when you get a bill in the mail with Hagerty, you'll see Essentia, which is a partnership between Markel and Hagerty. So there is a financial partnership between those two. Markel is the heavy underwriting backer on this, and Markel does kind of call the shots when it comes to underwriting. Hagerty wants to do their own underwriting at some point and call their own shots, so they have started this Enthusiast Plus. Now, in addition to Enthusiast Plus, they have forged a partnership with State Farm. State Farm, in turn, has bought about a 16% equity in Hagerty, and they are going to, in partnership, roll the State Farm collector car program under Hagerty, and they're going to call it State Farm Classic Plus. And when you get a bill, though, it's going to say Hagerty on it, because Hagerty is doing the servicing, and Hagerty, I believe, is going to be doing the underwriting for those too. At some point, State Farm's collector car program will go away in its entirety, and you will no longer see that. You will only see Hagerty paper. My understanding is the prices are going to go up compared to what the State Farm rates are, and I'm sure that's on a case-by-case basis and on a risk level. But be watching for that rate increase. If that happens, I would not hesitate shopping your insurance around to a broker that can source multiple companies, like us, Full Octane Insurance. Not us, somebody else. But I would highly recommend an independent broker that can see the landscape and understand where all of the companies sit, where all the price points sit, and how well their claims process works. And that's where we add a ton of value. Now, here's the one that's going to be a lot to unpack. In 2010, an insurance company by the name of NSM Insurance bought collector car company Condon Skelly. Condon Skelly was a little independent that I'm not sure who their paper was written on, but when NSM bought them, they started shopping for another company. In 2014, NSM acquired American Collectors. And their vision with American Collectors was to continue to acquire these named companies that have Condon Skelly in it, and give it a name that doesn't have a previous owner in it. So American Collectors is going to be this new umbrella. As we acquire companies, we're going to call it American Collectors. And that was a process that was happening in 2021, 2020. They had actually bought Heacock Classics in 2016 and rolled it into the fold. Heacock has always been underwritten in recent years by American Modern. American Collectors has partnered with American Family to do their underwriting, just as Haggerty uses Essentia and Markel. I know it's a little convoluted, but we'll have some pointers on the screen to kind of help you through this. What's important about this is that over time, they also bought J.C. Taylor. So J.C. Taylor came in 2021. And NSM acquired all these properties, and they're giving American Collectors the ability to start folding those into their business model. An example, Heacock is no longer going to renew American Modern paper policies. They're going to force a move to American Collectors, which writes on American Family. One example I've seen, the price point has basically doubled. So you are going to see increases if you were a Heacock customer, if you were a Condon Skelly customer, if you were a J.C. Taylor customer. As this period moves on and they fold it into American Collectors, the price points will most likely increase, and it's time to start thinking about shopping. Now, to complicate matters, in 2022, the NSM Group sold their collector car business to a company called the Carlyle Group. And the Carlyle Group then launched a thing called Ignite Insurance. And in 2022 going forward, they were still progressing and moving into the American Family backed properties. And then as of the end of 2025, there was an announcement that Philadelphia Insurance has acquired the Ignite list of companies, which is American Collectors, Condon Skelly, J.C. Taylor, Heacock. I don't know whether they're going to fold into Philadelphia or they're going to continue to stay as American Collectors. As you know, Philadelphia is the major underwriter for Grundy, so they have a ton of collector car business already, but their price points are extremely low, almost so low that you don't know how they can continue to service those particular policies. Now, what that means is they're going to get this American Collectors book of business that rolls in with the Heacock and the J.C. Taylor and the Condon Skelly, and their price points are going to be double or triple of what the Philadelphia policies typically are. And what that means to me is they're going to start meeting in the middle somewhere, even though Philadelphia, it's their goal to be the long-term underwriter and displace American Family. And that will give them some cost of efficiencies, so they could possibly do it a little bit cheaper. But I got a feeling once they see what they had to pay was some crazy amount. I was like $6 billion or something for this acquisition. They are not going to be dropping their price points to Philadelphia price points to repay that. I can guarantee once they've got that appetite of higher premiums, they never go down. So you're going to see, in my mind, I think the Philadelphia product line, which is predominantly Grundy, is probably going to see some increases over the next several months as they migrate these two business, or actually 5 businesses in together. Now, Philadelphia has been around a long time. I still can't find any press on what their plans are with the actual brand specific companies, whether they're going to allow them to operate independently. They have been operating kind of independently, but all out of, I believe, a Pennsylvania or a New Jersey type office, which handles Heacock, J.C. Taylor, Condon Skelly. They're merging all of those into one group of individuals for support for economies of scale. There may be some more consolidation that's going to go further and roll all of those into the Philadelphia companies. And that'll be interesting to see. Now there's a new kid on the block, and that is Open Road. Open Road has launched in 2024, and they launched in a handful of states. And there's some executives that have been with Haggerty and I think Progressive or one of those companies, and they went out and launched this company called Open Road, and it is actually backed by Griffin Highline Capital, and it's underwritten by an insurance company which is Great American Insurance. So National Interstate Insurance Group is the paper, and they are owned by Great American Insurance. There's a lot of layers here. It gets convoluted, and the average guy, you probably don't want to know this, but when you're insuring your babies, you kind of want to know who's covering it, where it's coming from. Are they financially stable? Are they stable from just the matter of complexity right now? If you look at all of the companies that Philadelphia just sucked up, and American Collectors has been trying to migrate and merge, there is going to be a lot of change. There is going to be, I believe, some gaps in support because of so many companies coming together. As a broker, and I represent just about every one of these out here, I still stand very heavily behind Hagerty. I still stand very heavily behind the Corvette Museum, which is underwritten by American Modern. And I am starting to get a really good feeling about Open Road. Open Road kind of falls in the middle of those. The only downside to Open Road is, and it may be a downside to some, it may not to others, but Open Road does not do any paper billing. They don't do anything in the mail. Everything is done online. So you're going to download your ID cards. You're going to download your policy. You're going to renew via an email notification or an auto bill. And that's a lot of people in the demographics that have collector cars are not prepared to give up the paper. So if you're not prepared to give up the paper, Open Road is out. Then we start looking at Hagerty and Corvette Museum through Full Octane Insurance. And those are the predominant companies that we are focused on writing because we have a comfort feel that one, we're going to get a good value. Two, we're going to get excellent support. And three, there's no chaos going in the background. There's no acquisitions and mergers and who's doing what and who's the boss and who's going to be the boss going forward, because you have an investment firm behind this and they're about the dollars and cents trying to recoup all that. Now Philadelphia is, I'm sure, going to keep a front-facing company like American Collectors, probably go down that philosophy and start sunsetting Heacock, start sunsetting Kahn and Skelly and J.C. Taylor, and merge them, finish that merger up into American Collectors, because they made such a big investment. I know there's a bunch of questions. This was a ton to unpack. It's really a dynamic, ever-changing environment. That's why it's real important that you get hooked up with a broker like myself that keeps up with what's going on in the market, because if you don't keep up with what's going on in the market, you're going to be stuck someplace that you shouldn't be, probably. So thanks for being with us. If you have questions, leave some comments. Don't forget to reach out to us. Info@fulloctane.com is our email address. Our phone number is 615-669-4438. Happy to quote anything for you if you happen to be one of these companies that's going through a bit of change right now. If you're happy with them, that's great. If you think you want to have a second look and a second opinion, give us a call. We can help you out. So thanks for being with us at the Full Octane Lodge. Oh, wait, I almost forgot. Our legal team made me promise to display this disclaimer before we ended the video. Please take a moment to read it before you make any buying decisions.